The people who say cash is king are people who have been scared and have lost money.
Right. Yeah.
So when they say it, we should go buy.
We always seem to buy things at high prices, and then when we want to
Yeah.
sell, it's always like on a low.
He bought a gold coin in the 70s for $50, and now it's $2,000.
In reality, only one thing will increase with time.
So apparently, experts say the economy this year is going to be extremely bad, worse than last year. I don't see how it can be worse because 2022 was really bad.
Especially the second half of this year, apparently. The whole world is going to go into a recession, apparently.
Yeah, the Fengshou masters in Hong Kong say it's going to be really bad in 2023. As a money coach, Alvin, what can we do to overcome the challenges of a bad economy?
Well, actually, you may remember that not just this year, maybe 1 year ago or 2 years ago, you may hear the similar things.
Yeah.
They will say that, the economy is really bad, so you need to be very careful about your investments. So the conclusion is that actually every year is bad. So in this situation, do you want to keep all the money idle or just keep aside and wait for the good chance to come? We never know when will be the good chance unless the chance is past. True? So you cannot time the market. You never know when it's good, when it's bad. You never know. So what you can do is to use your strategies to help you to handle the environmental issue. So the very simple thing is that if you are worried so much about the future, then you need to divide your investment amount into maybe smaller portions. For example, you want to invest $100, then you can divide this one into 5 portions. Each time you invest $20. If you put the worst bet in the first time, you cannot time the good time to invest, then you still have $80.
Yeah.
So it's one of the way, or maybe I'm not that negative. I still have some hope that the market will recover, will become good, maybe in the near future. Then you can divide your money into lesser number of portions. For example, into just 3 portions. Each time $30 or $33. So it's one of the way that you can do to help you how to handle the difficult market. And this kind of method actually can apply every year, every time. It's very easy.
But besides curbing the risk, you also mentioned how you can actually save more to save for a rainy day.
Yeah, right. Another point that you need to consider is that if you are thinking the market is not good, the economy is not good, then you need to ask yourself, if the market is not good, whether it will affect my income. If you are worried that my earned income will be affected, maybe I will lose my job, then maybe you need to keep more emergency cash. If you can remember 3 years ago in the 2020, when the COVID just started, and this year in the first quarter of 2020, many people said that they were facing the financial difficulties because they don't keep enough emergency cash. So if you're worried in the future, maybe 1 or 2 years, you still have the similar worries, then you need to keep more. For example, you may keep 6 months or up to 1 year of your money spending. This can help you have the peace of mind that no matter what happens in the coming 6 months or 12 months, I still have money to spend. Then I think it will help you to have a peace of mind, and it also helps you to manage other investment better. No need to sell at the low side, and I think it is already a good strategy.
I remember at the start of the pandemic, the whole entertainment industry came to a standstill, and Aaron Kwok had to do a charity concert just to raise money for the dancers, because basically for the whole of 2020 there were no concerts, all the dancers had no work.
The crew had no work.
Yeah.
Cameramen, all the guys behind the scenes. So it became, like you say, if you had no emergency cash, then you had no income because there was no work.
Yeah, I agree.
And also one thing that Alvin said was a bad market only affects you a lot when you're speculating.
When you're gambling.
So when you're gambling, if you're not gambling, if you're just trying to save or like beat the inflation, then basically your regular investment funds or like your regular investment portfolios might help you stabilize your financial situation.
I agree, yes.
Yeah.
So when the economy is bad, is cash king? When does that theory apply? When is cash king? Is cash king?
I remember that in the past, maybe in the past 20 years, and there are 2 years, many experts said that you need to keep the cash, 2009 and also the year of 2012, right? And what happened in these 2 years? Actually, they're the year after a big financial crisis. In 2008, there will be a US in the financial tsunami, and in the 2011, actually is the euro crisis. So at that time, in the financial tsunami and also in the euro crisis, many investors or many people lost a lot of money, no matter in the stock market, in the property markets, etc. Lost a lot of money. So the expert said that at that time you need to keep more cash. But in the reality, in the year of 2012 and also the year of 2009, no matter the stock, the property market, and also the bond market, all increased a lot.
Would you say it's because it fell down right to the bottom, so the only way is back up?
Yeah, right. Actually, in the low side, so there may be a rebound, we don't know, but at least it's a growth. So at this point of that, one important investment mentality, we easily affected by some psychological issue. When we have a loss, we don't want to lose more, so we want to play safe. But when you have this type of feeling, actually, maybe it's a good timing to buy. But most of the people miss this opportunity. I don't know whether you have this experience.
It's whether you have the guts to invest.
So, the people who say cash is king are people who have been scared and have lost money.
Yeah, right. Yeah.
So when they say it, we should go buy.
So that's why I said that if you hesitate about the future, then you still need to invest. But you can invest in several portions, in 5 portions or in 3 portions, up to you, whether you are positive or not.
So cash isn't king. I've heard some people buy gold as an investment. There's a money coach called Robert Kiyosaki who said he bought a gold coin in the 70s for $50 and now it's now $2,000. So over 50 years it's increased in price. So is gold a good investment?
In Hong Kong, also many people interested to invest in gold or some other commodities. In the world, 2 places, the people there welcome gold very much. One is mainland China, one is the India. And in India, they said that gold actually is a kind of a dead asset, DEAD, dead asset. Because when you buy gold, no matter how much, you will not trade it. You just put it aside. But you cannot trade it, you cannot easy to liquidate and to get cash. So if you are investing in gold, you are facing a liquidity risk. In addition to this one, from the past history, we know that the gold price actually is related to the US dollar trend. And in the past, starting from the year of financial tsunami, the 2008, and at that time, the US economy was in a very bad situation. So at that time, the US dollar is very bad. Versus the gold, at that time, the gold was at a high price. So after that, in 2013, when the US recovered from the bad situation, the gold prices started to drop. So after that, you know that now we said that the US dollar is quite strong. So if you believe that the US will continue to be strong, it means the gold price will not be strong again. So it depends very much how you think about the US dollar trend. So whether it's a good investment also quite depends on your ideas about the trend of US dollar.
I think it was 2010 I bought 2 gold coins and then as I saved I spent all my money. So I took the gold coins to sell and maybe because the period of time was too short, so like 2010 to 2013, the price hadn't gone up very much at all or hadn't gone up at all. Buying and selling like that, I made no money. So I was thinking maybe if I held it for longer, if I held it for 10 years, maybe I would have made some money or not.
I think you are not buying a gold, you're just buying a hope. So now you know that what's happened. In reality, only one thing will increase with time. It's your age. Only one thing. There's no investment that in long term you must win. There's no such thing. No matter in Hong Kong or in other places.
Well, the thing is, we're very bad with speculating. We always seem to buy things at high prices, and then when we want to sell, it's always like on a low. So we're not very smart and lucky in terms of...
I don't think it's lucky. I think you need to do your homework. And
yeah, true.
Like I've been saying, data shows that when the dollar is high, the gold prices are low and reverse. So you need to do your homework before you buy or before you sell.
But no worry, you're just ordinary people. Most of the people buy high and sell low. Most of the people. So don't worry, you're coming.
Oh, we're like the common, yes.
We need to copy you a bit more.
Another thing that a lot of, our parents always tell us to be safe, you should always buy property. Property is a safe investment, and that's across all cultures. any stage of your life, if you're unsure, buy a property. Now, would you say purchasing property is the safest and the most secure type of investment?
It depends on your purpose. If you want a safe place to live, then certainly you need to buy property. But if you take property as an investment, then you need to think carefully because from different period, you will notice that the return actually is quite different. For example, in Hong Kong, from 2003 to 2018, in this 15 years period, the property price increased around 5 to 6 times. But if you count from the 2018 to 2022, in past 4 years, you will know that the property price for smaller size properties dropped by more than 10%. So whether it will be a long term, it will increase, is subject to many factors. Some of the economic factors, some of the other global factors, etc. And also when you count from 1997 to 2018, in these 21 years, according to some property index, actually there's only one time increase in the index value. So if in 21 years there's only 100 return, it means on average every year is just around 4% return.
Yeah.
Do you think it's very attractive? I don't think so.
And I think buying and selling property only happens more commonly in Hong Kong because we don't have a very high capital gains tax.
Yeah, right.
Yeah, because if you buy overseas and you sell, like any investment money that you make from your property, you're paying 30% capital gains tax, and then you're left with not much money.
Yeah. Agree.
If you didn't have a property now, you had the means to buy a property, would you buy a property?
If I need to live, certainly I need to buy one. But you know that in different life stage, actually our needs for property are different. If you have children like you, maybe you want to buy property near the schools. But if you're in the retirement age, maybe you don't want to have such place because it's too noisy. The old people don't like. They may like to buy property near the park and also like near the hospital because it's more convenient for them. If they have time for leisure, they can go to the park. If they have some urgency thing, they can go to the hospital. So it's quite different. So don't mix up if you are taking property as an investment or it's a need. For need based on your life stage. For investment, whether you want to keep high lump sum of money in something with not many liquidity. So I think this is one of the considerations you need.
But you definitely buy, depending on the stage of your life. You buy maybe a small house, maybe a small flat near a hospital or near the park, or if you're a small family, then somewhere where there's a good catchment for schools.
Right.
Would you say it's true that only your second property will actually be like an investment? Because let's say I'm buying the property that I'm going to live in, right? And buy it at a certain price, and then 10 years later it increases in price. Like, I'm not going to make any money unless I sell my property. And then when I sell my property, I'm not going to be able to afford a better place to live in because all the property around me is increased as well. So it's only your second property which is an actual investment, or that you're kind of hedging on, or like,
yes, the first property actually is based on your need. You need to live there. And after that, if you still have idle money and you don't worry about holding too much money in one single investment, certainly you may also invest in a property.
Right. Don't buy gold. Don't hold too much cash. Don't invest in property. What do we do when the economy is bad, Alvin?
Actually, no matter in what economy, you still need to have investment.
Okay.
But you need to have a balanced portfolio. This is the main idea that I think everyone should know and should follow.
That's my goal this year, to balance my portfolio.
Right.
Let's do it safely.